Thank you everyone for joining on this call on this Friday evening. My name is Adit Kapoor. I'm the lead product specialist for ICICI Prudential Asset Management Company. Welcome you all on this call. We have tried every time to connect with you with our views on the markets and what is our understanding on the markets in the current juncture. In that endeavor, today we have Mr. Shankaran Naren, our Chief Investment Officer and Executive Director, and a well-known figure in the asset management business. Before I hand over to Naren, I'll just read out the standard disclaimer for the con call. This call is intended only for the invited participants. Recording, copying, retransmission, live streaming, or reproduction of the call, whether in full or in part on any platform, including social media, is strictly prohibited. Without prior written permission from ICICI Pru AMC, by continuing to participate, you agree to these terms. ICICI Prudential AMC reserves the right to take appropriate action for any violations. Thank you, for joining on. Now I hand over to Naren. Naren, over to you with your views.
Welcome to all of you. It's a pleasure talking to all of you on a regular basis. As most of you know, we are believers in four concepts: valuation, cycle, sentiment, and trigger. We like to be very positive when the valuations are low. We like to be very positive when the cycle is low or starting. We like to be positive when sentiment is very negative. Remember that sentiment doesn't work in a different way. And triggers are always difficult to understand. What trigger leads to, for example, if you look at the last 1 month, there has been a good correction in some of the semiconductor stocks and a rally today. It is very difficult to predict what works as a trigger when valuation cycle and sentiment favors the market to fall. See, in India, we have over the years had a very good macro. And post 2023-24, we had a situation where markets were not cheap. In fact, markets were a bit overvalued. And that forced us to talk about asset allocation on a consistent basis. Asset allocation has many categories, which is multi-asset, balanced advantage, aggressive hybrid. And recently, we had two areas of asset allocation. One is balanced hybrid and a multi-asset active fund of fund. Again, asset allocation. So we have created multiple vehicles for asset allocation, each in a different way. For example, if you take balanced hybrid category, it has 40 to 60% in equity and 40 to 60% in debt. So it becomes a very interesting category for asset allocation, which we launched last month. So, the entire experience over the last 2 to 2.5 years in asset allocation categories has been very good, given that the markets have not gone up substantially. And therefore, it has been a good investing experience, considering that many of our asset allocation oriented strategies are large. Of course, balanced hybrid is very small, but it was launched only last month. We have also believed in specialized investment funds, where we're very thankful to the regulator for starting this category and coming up with a very interesting regulation for us to launch. As a framework, what we believe is that, specialized investment funds are not funds where we are actually taking any leverage or anything like that, because the goal, what we have seen over a period of time, is that we need any fund in ICICI Prudential to be scalable, and it has to be an investment, and it has to have a process, what we call SIP. Because the reason is that if anything is not scalable, it doesn't help ICICI Prudential to launch a category. Similarly, there is no point in becoming a trading category. It has to be something where you can invest for the long term, and we have to keep working on processes so that even if we make periodic mistakes, we try to learn from it and improve over a period of time. This has been our framework. So the specialized investment fund category which the regulator has brought in over the last 1 year is one of the most interesting categories because it involves handling derivatives, and we believe in a model-driven approach. And we don't believe that we have to look for a situation where we need to look for aggressive funds. That is the kind of situation we are in. Where are we in the market? The market, the macros are reasonable, not exceptional, because of the problems in the Middle East region and the fact that oil has gone up. It is also reasonable because the monsoon has a worry of El Nino, and so far the monsoon has been below average, not by too much, but below average. And as most of you know, that the global world has too many geopolitical issues. So if you look at the earnings, we have a situation where the earnings is good, but valuations are not cheap. If valuations become cheap, we would be very happy. But for everyone to put big way into equity and not into asset allocation oriented categories or in specialized investment funds, but that is not the situation today. People ask us, when will FII money come? I'm confident it will come in the next 3 years. For it to come in a sustained basis, India has to be the growth story. And currently, what has happened is that not because of India's growth story, but because of the fact that artificial intelligence based growth stories like Korea, Taiwan, US, and parts of Japan have actually delivered much more growth. Money goes there. It doesn't mean India is not a growth story. It is only that other countries have been bigger growth stories in the recent past. That is the kind of situation we are in. Why is it we don't worry about earnings? Because what people don't realize is that when you have inflation, actually earnings is better. And inflation is something which works sometimes positive for earnings. So even if you look at the April to June quarter, there were a number of companies which actually benefited out of earnings at this point of time. So why have FIs not been investing in a big way, particularly from October 2024 uh, till I would say June 2026? It was primarily because most of the bigger growth area was artificial intelligence, and that money was not meant for India because India was not seen as the beneficiary of artificial intelligence stories at this point of time. So the regulator has actually come up with the Reserve Bank has come up with a very interesting framework for FCNR deposits. And that is likely to lead to a situation where the domestic liquidity is likely to be comfortable. So we are big believers in asset allocation, unconstrained investing, and moderate returns. What do we believe in called unconstrained investing is that you can invest in a wide variety of sectors and stocks, not a narrow stock like technology or let's say FMCG or something. It has to be unconstrained, because if something is not unconstrained, what happens is you're not in a position to invest for the long term. You have to both buy and sell, and that won't be the case unless it is unconstrained. We are big believers in specialized investment fund. We must be the second AMC who has launched 4 products. Why did we launch 4 products? We launched 4 products because there are interesting, all the 4 products that have been launched are interesting. So if you look at the X Top 100 long short specialized investment fund, it is meant for defensive investing in small and mid caps. If you look at the equity long specialized investment fund, it is meant for long-term defensive, slightly defensive uh, investing in equity. Does it need to be defensive all the time? The answer is no. If you look at hybrid long short specialized investment fund, it is meant for hybrid investing, and we believe that that is itself defensive, but within that our goal is to deliver a good risk adjusted experience over the long term. And the fourth, which I believe is the most cautious product in the way we are running it, it is the active asset allocator long short specialized investment fund. Here we have a wide variety of products to invest in. we can invest in REIT, we can invest in InvITs, we can invest in exchange traded commodity derivatives, we can invest in equity, large cap, mid cap, small cap, we can invest in debt of all types, and we can use derivatives to hedge our equity allocation as per the norms of SEBI for specialized investment fund. So what happens is the active asset allocator funds turns out to be the most cautious of the specialized investment funds. Obviously, if the market shoots up, it is the product which is likely to not do that well because of the same reason that it is defensive on the way down, that it will be defensive on the way up as well. So that is the kind of situation. So what has happened is that these four specialized investment fund, along with the sector rotation specialized investment fund, which we have not launched yet, becomes a very interesting way to invest for the long term. The advantage with all these categories is that you have the ability to be aggressive and you have the ability to be defensive. So if you take, for example, the equities long short specialized investment fund, it is possible to be fully invested in the fund. Similarly, for example, in the X top 100 specialized investment fund, it is possible to be fully invested in the fund also. So it is not that the fund has to be always defensive, it can be aggressive. But as an asset management company, since we believe that the market valuations are not cheap, or dirt cheap, we will not be running it as aggressively as a pure equity fund. So if someone wants to get, if someone is extremely positive on anything, they can choose a pure equity mutual fund and not choose a specialized investment fund for investing. Having said that, we believe that the whole flexibility offered in the specialized investment fund by the regulator makes it very interesting for long-term investment. So broadly, this is the kind of situation. Within the unconstrained equity categories, we are believers in specialized systematic investment plans and systematic transfer plans. We like multiple categories in unconstrained equity. For example, we like value as a category. We like special situation India opportunities as a category. We like flexi cap as a category. We like business cycle as a category. We like multi-cap as a category. So frankly, we like multiple categories within the unconstrained area. But our belief is that a pure equity fund is likely to be more aggressive than a specialized investment fund. But at the same time, we believe that there are investors who are extremely positive on equity. We are believers in equity, but we are believers in a moderate return situation where we believe that categories like specialized investment fund and hybrid categories like balanced advantage, aggressive hybrid, balanced hybrid, and multi-asset are also interesting. As most of you know, some time back, we were not very positive on gold and silver. Now we are not saying that we are not positive, but at the same time, we don't believe that investing standalone in gold and silver is justified at this point of time, because even today, after the correction in gold and silver, and because of the customs duty, which is high, we are not seeing a situation where the category is extremely cheap that one can invest. People ask us, how do you look at category like gold and silver for valuation? We make use of Nifty to gold ratio and Nifty to silver ratio to determine that. And that is the kind of situation. Over the last few months, people have asked us a question, what do you think of international investing? Frankly, we were very positive in international investing in earlier years. Currently, we do not have any open funds, but currently one has to remember that rupee is not overvalued, rupee is possibly undervalued, and most of the global markets have done much better than India. So in our framework of valuation, cycle, sentiment, and trigger, we believe that this is a time which is not as attractive to invest globally as it was 2 to 3 years back. But kind of questions that have been asked over the last few months suggest that everyone is extremely positive on this area. But if you look at the valuation cycle and sentiment, we would argue that it is no longer a time to be aggressively investing in global areas at this point of time. We do believe that, of course, investing some amount of money or investing through a system in a systematic way is fine. And as an asset management company, we do not have any open products to invest in at this point of time. So broadly, this is where we are. And as an asset management company, our goal is to manage other people's money. Our goal is to manage it in a good risk-adjusted manner. Investing is not arithmetic, so no one can get everything right. But our goal is to give investors a good experience, and on a continuous basis, we try to introspect from the mistakes that we may be committing in investing. And that is what, as an asset management company, ICICI Prudential Asset Management Company has been doing over the last 30 years. So at the same time, the entire mutual fund industry is a very, very interesting industry to invest in. And we think that thanks to the good regulations and the kind of products that the mutual fund industry has created, there are very, very interesting ways for investing in the long term at this point of time in mutual fund products. This is what we set out to do. And now I would request Adit to ask questions that you may have on the product, and we can have a detailed look at them, or anything else that I have not covered, which Adit and you want us to cover. We are extremely happy to answer that in a good way. There is one question people keep asking me: what will be needed for us to be much more positive on equity? We would want to have a better geopolitical situation, unlike what we have at this point of time. We would like to have a situation where the market is slightly cheaper, and we would like to have a situation where we are very comfortable on what is going to happen to India due to artificial intelligence. We have a situation at this point of time where we are not sure of all these things to the same extent. But if any of these three things, if all the three things become comfortable, we would be much, much more positive on equity today and not look only as at asset allocation, systematic investment plans, systematic transfer plans, and specialized investment fund. If we reach that situation, we will definitely come back to you, because this is something people have asked us all the time. At the same time, if you look at it, if you compare 2024 June to September with 2026 July, we are much more constructive on the market than we were in 2024, because valuations has corrected from where we are in 2024. There has been a time-wise correction in the market. So, and the fact that most of the global markets have become much more costly than they were in 2024. So, are we more positive than on the market than we were in 2024? The answer is yes. And that is the kind of situation we are in. Over to you, Adit, and I would be happy to answer any questions that the customers may have on any of the areas, and we would be glad to explain it in greater detail. Over to you, Adit.
Thanks, Naren. Naren, there has always been a question on IT as a sector, because last 5 years we have seen IT, getting hammered from typically November 2021 kind of a situation till date, and AI is one of the reasons we have also looked upon IT as a sector being underperformed. How do you see IT as a sector at this juncture, and what is your view on the sector itself?
There is a time, there is a time when you are very positive on a sector. There's a time when you are very negative on a sector. Over the years, we had an experience in media sector. In the media sector, we thought the sector was coming down. So let's look at the sector. And what happened was the sector got disrupted due to digital advertising and, internet being a vehicle for delivery, due to which, many of the media stocks kept coming down and they never recovered. In fact, most of the media stocks have not recovered. After that, one of the factors that we have put into place is, if you feel a sector-wide disruption, we will not try our best to actually recommend a sector fund, even if it has done badly. And that is the call we have taken. So due to that, in the last 6 months, we have not recommended standalone technology fund. There are a number of people who ask us what to do if we are more positive on technology. We tell people, why don't you choose a category like export and services, which is much more unconstrained than the technology fund. And we believe that that framework is what we would recommend if people want to consider IT. Otherwise, we are, as most of you know, we believe in unconstrained funds, and both our value fund and our special situation fund has been overweight the technology sector, and that we kind of framework would be a better way to invest in the fund, or choose a fund like aggressive hybrid fund of fund, which is also overweight IT, but it is not an IT fund. So therefore, we believe that these are areas that one can consider if one is positive on IT, because we are worried that if we get people to invest in IT and we realize that artificial intelligence has disrupted the sector, the losses can be bigger. And that is the reason we have not marketed a standalone IT fund.
Naren, we have seen that we are looking at a decent credit growth coming in, and the balance sheets on the banking side are decently good. Despite that, banking as a sector has not done well. What's your view on the banking segment at this point of time, and NBFCs and the entire financial services sector?
The last quarter, thanks to very high credit growth, there has been a problem in net interest margins in the sector. But overall, we like the sector a lot at this point of time for investing. And for people who both buy and sell, they can consider banking and financial services as a sector. The reason why it may not have done well is primarily because it is the number one holding of the foreign institutional investors and the domestic institutional investors, and that has played a role in the lower returns of the sector. Having said that, we are currently positive on the sector, but we don't think you can make mega returns in the sector because of the extreme over ownership among all the investment institutions.
Naren, as you mentioned, there is geopolitical concerns which is persisting for quite some time now, and in that view, what is the outlook for oil and gas as a sector at this point of time?
See, what has happened in oil and gas, which makes us very positive relatively, rather very positive, is the fact that too many refineries have got into trouble because of so many accidents due to war and otherwise. So, what has happened is refining margins are at their highest ever in many years. So, we like oil and gas as a sector. And having said that, this is based on an assumption that there won't be a market acceleration in Gulf region. If there is a market acceleration in Gulf region, then this call can go wrong. Do I have more knowledge on than any of you on what will happen in the Gulf region? The answer is no. We are believers that we don't understand what is going on in the Gulf region. So I believe that purely from a refining point of view, we are positive on the oil and gas sector at this point of
Any view on the entire AI disruption that is going on globally and how it has played out in the last 1 month? Uh, what can we expect going forward on the AI front?
It's tough to say. Every Indian IT services company says that we never did hardware, but we were successful in IT services. So this time also we are not successful in IT hardware, but we'll be successful in IT services. That is what many of the companies tell us. Whether that is true or not, we'll come to know in the next 3 to 5 years. If you had a view, and some of the listeners to this call may have a more knowledge on AI and its impact on Indian company and country, I am a believer that if you tell me that there is a positive impact, then I would be much more positive on equities. I am a believer in moderate return more because I'm not sure on what will happen due to AI on Indian economy and on Indian companies. I don't have full clarity on that.
Thanks, Naren. I guess we have taken up most of the questions that were commonly coming from the investors at this point of time. Any parting comments for the investors?
To sum up, I think specialized investment fund is a very interesting area for investment. We have created 4 categories, and We believe that the four categories that we have launched at this point of time, which is the equity X100, is a defensive way of investing in small and mid cap. The equity long short is a way of investing in equity, and with a fund manager available to try to hedge the positions if they want to. The hybrid long short, where the investor can get a good experience in a hybrid kind of specialized investment fund, and the active asset allocator one, which is the one which frankly many investors should consider because it is lower risk. We believe that it is a product where where we as fund managers can invest in a wide variety of products, whether it is exchange traded commodity derivatives, REIT, InvIT, equity, debt, equity, all types. And we think that it is an area to invest in for people who want to be more conservative for long-term investment. So that is something which is very clear. We continue to like all our hybrid categories, whether it is the aggressive hybrid category, the recently launched balanced hybrid category, multi-asset category, and multi and all and the active fund of funds that we have launched in the multi-asset side and the dynamic asset allocation side. So we have a wide variety of strategies which are available in the asset allocation space. And one can always consider systematic investment plan and systematic transfer plans in unconstrained funds for the long term. Our market view is that one should do asset allocation, one should practice unconstrained investing, and one should expect moderate returns in the market. The day everyone is clear on geopolitics and what happens to this year's monsoon and artificial intelligence, one will have a better clarity on what kind of returns to expect. But at this stage, as we speak, it is impossible to make definitive views on all the three. That's what it is. As an asset management company managing other people's money, we are very conscious of the responsibilities that it entails, and we will try our best to make a good investor experience for our investors. But at the same time, one has to remember investing is not arithmetic. No one would have imagined 1 year back that you would have a war which never in the Middle East, which can cause so much trouble. So there are too many imponderables, and those imponderables force us to look for both asset allocation and specialized investment funds as a way of investing. Thank you for participating in this call. If you have any further doubts, you can contact us, and I'm sure they'll be in a better position to answer and give you whatever clarifications that you may need. Thank you all for participating.
Thank you, everyone. Thank you, Naren, for sparing time for us. All the best. Thank you. Thank you for joining in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.